In this video, I am gonna walk you through, step by step, how I would invest $1,000 if I had it today. This is for educational purposes only. I am not a financial advisor, and everything I say is not financial advice. That being said, let's get into it. So the first thing that I would do is open up a brokerage account. Now I use Webull, but there are plenty of other options out there, like Moomoo, Vanguard, E-Trade, Charles Schwab. But if you are new to investing, I really recommend looking at some of these newer brokerages, because they have a lot more modern features. They're easy to use, easy to understand, and they offer things like fractional shares, and some even offer micro-investing. So if you don't have a lot of money to start with, you can still build your portfolio. Now once you have opened your account, you'll want to fund it, so you can either link your checking accounts or savings accounts and transfer money over. Most brokerages allow you to do this instantly, and it doesn't cost anything. If you're wondering, I like to keep about 3 to 6 months worth of expenses in my checking account for emergencies. So anything beyond that, I'll just transfer it over into my investment account. Alright, so now that you have funded your account, what should you actually buy? Well, here's how I think about this. First, I always recommend that people max out their employer matching contributions. If you have an employer that offers this, basically they will match whatever you put into your 401k up to a certain amount. Let's say they match 50% up to 6% of your salary. So if you put in 6% of your salary, then they'll also put in 6% of your salary. That's essentially free money, and you should always take free money. So I would put at least 6% of your salary towards your 401k, and then whatever is left over, I would put towards one of these other investments. Alright, so we got the 401k taken care of. What else should you invest in? Well, if you're young, healthy, and have no debt, you may want to look into opening up a Roth IRA. It's another type of retirement account, and with this one, any money that you make from this investment, you won't have to pay taxes on it. So long term, this is great because you can eventually withdraw all of your contributions and any gains that you VA made tax-free. However, there are some rules that you need to know. You need to be under 50 years old and make less than $153,000 per year to open one up. But if you do qualify, I highly suggest you open one up. And after you've opened up your Roth IRA, you can deposit money into it. You can contribute up to $6,500 per year. And remember, any money that you put in, you won't get taxed on. Now there's 2 ways that you can fund this. You can either set up automatic contributions, where every paycheck you get, it'll automatically take money out and put it into your Roth IRA. Or, you can manually transfer money from your brokerage account that you've already transferred from your bank account into your Roth IRA. Alright, so at this point, we've covered the basics of retirement accounts. So what else can you invest in? Well, if you don't have any high interest rate debt like credit card debt, you could also invest in a high yield savings account. Now the national average right now for a high yield savings account is about 4%, and by investing in one, you're able to earn interest on your cash. It's not much, but better than having it sit in your brokerage account doing absolutely nothing. After you VA maxed out your retirement accounts and have some cash sitting in a high yield savings account, that's when I would start investing into taxable individual stocks, ETFs or mutual funds. So if you're wanting to buy individual stocks, there's a few companies that I've been eyeing recently, like Tesla, Walmart, and Apple. The thing that I like about these companies is that they're big, well-established businesses that also pay dividends. And if you hold them for more than a year, any dividends that you receive are also tax-free inside of your brokerage account. Now, if you do want to pick individual stocks because you're worried that you might lose money, or maybe you do want to have enough time to research these companies, you can always just buy index funds instead. An index fund simply tracks an index. One popular one is the S&P 500, which holds the 500 largest companies in the US. So if you buy an S&P 500 ETF, you're essentially buying a small piece of all of those companies. Because of this, these types of investments tend to do pretty well long term, and historically they VA had an average return of around 10%. So how much should you be investing? I like to follow the 3-fund strategy. That means that I have roughly 70% of my portfolio invested in stocks, 20% in bonds, and 10% in a cash equivalent like a high-yield savings account. Now this is just a suggestion, and you may want to adjust it based on your risk tolerance, age, and time horizon. For example, if you're nearing retirement, you may want to have more bonds, because you do not have as much time to recover from big market swings. Or if you're super young, you may want to take on more risk and have a larger percentage in stocks. Now if you're thinking about buying crypto, I would probably wait before jumping in. Crypto is very volatile, and I personally think that a lot of the recent growth has been due to speculation rather than actual use cases. Now, I'm not saying that it's a bad investment and you shouldn't buy any. I personally think it's a little too risky, and I'm not going to be buying anytime soon. Alright, so now that you know what to buy, how often should you be buying it? Well, I'm a fan of dollar cost averaging. That means that instead of trying to time the market and figure out when's the best time to buy, you simply invest a fixed amount of money at regular intervals. For example, you could be investing $100 every month. By doing this, you're able to buy more when the stock price is lower and less when the stock price is higher. Okay, so now that you know what to buy and how to buy it, there's just a couple more steps to actually executing on your trades. So for this example, I'm going to show you how to buy a stock. Now it's pretty similar for ETFs and mutual funds. So first you want to click on buy, then you'll want to search for the company that you want to buy. In this case, I'm going to buy Tesla. Then you'll want to choose the amount of shares that you want to buy. Remember that with stocks, you can buy fractions of them. So if you don't have enough money to buy a whole share, don't worry, you can still buy a fraction of one. After that, you just click on review and submit. If you're buying a mutual fund or an ETF, it has pretty much the same exact process except that you won't see the price fluctuate every second. That's because mutual funds and ETFs are priced only once per day after the market closes. Alright, that's how I would invest $1,000 in 2025. Now, I want to hear from you. How are you investing your money this year? Drop a comment down below. Also hit the like button if you found this video helpful, and consider subscribing if you haven't already. I post new videos every single week about personal finance, investing, and entrepreneurship. Thank you guys so much for watching, and until next time, all the best.